Hey everyone, it's Mike and welcome to lesson number 6, Point of Control Setups Part 1. Part 2 will take place in lesson number 7. There's a total of 10 setups I'm going to explain in detail and show you, but I don't expect you to learn all 10 and trade with all 10. I believe that each trader has to find their own path, find their own methods that work for them, things that resonate with them, and what would even make me happy is if you take some of these setups and you adapt them to your own trading, or you use them as a base to go down another avenue with point of control to develop your own trade setups. So really what it's about is about getting the ideas to you, and hopefully you can take them and run with them and develop them into something that's going to work well for you. So before I get started, a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So, in this lesson, I'm going to cover the following setups: pair up point of control, extreme point of control, which I talked about a little bit earlier, point of control in the wick, the slingshot, and the wave, which are point of control patterns. Now, again, in the next lesson, there's additional 5 setups that I'll be talking about, but really what my goal is not to say, oh, you have to use point of control in this way. No, you have to use point of control in a way that suits your trading style, suits your trading plan. So, setup number 1, the pair up. And the pair up occurs when 2 consecutive bars have the same point of control, and what you're going to do is you trade in the direction of price. Now, there are 2 types of pair ups, right? There's bars that are both going in the same direction, i.e. up bars or down bars, green candles or red candles, or bars that are going in the opposite direction, i.e. one up bar and one down bar, or one green candle, one red candle. Go with the direction of the second bar. And a pair up is indicative of the market putting in a temporary value area of a couple of bars that it quickly moves away from. So basically what you have is a market that's hidden going sideways, is the way I like to describe it. And point of control is the best way to tell it is point of controls that are at the same level over 2 bars. Now, like I said, there's 2 types pair ups: bars that are going in the same direction, same color for candles, or opposite, one green candle, one red candle. Personally, I prefer bars going in the same direction, both green candles or both red candles, but I do believe that there is some value in bars that go the opposite direction. And again, you should do your own studies and find out which particularly works for you and which you're comfortable with using. I like them going in the same direction. So what do we got here? Here it is, right here in the middle. I don't know if you can see that. Let me just I'll get a circle here, right here. So they're both going in the same direction there. All right, we got it, red candle, point of control right at the same level. What happens? Boom, market sells off. Over here you got 2 point of controls, 2 prominent point of controls at the same level, but you got a green bar stuck in between. It's sort of a double top, but really what I like is point of controls at the same level, one right after the other. Over here, just right off the lows, you start moving up off this low. You have point of control, the 14-15 bar right down here on time. Same level. Notice how it holds pretty much. Next bar up, trades back down, gets to within, trades to that point of control, 1 tick through it before it resumes its move back up. This one is not at the same level. Over here, you have 2 different price levels. You got one happening at 49 and one at 48 3/4, the other one at 49. Okay, now this is a 1-minute chart. The previous charts I showed you were 8 range charts. The way I'm going to show you all these setups are range-based charts, 1-minute chart, and 5-minute charts. So that will explain the different chart types, so you can see it on different time frames. Now, this is one here where it's the opposite bars, right? You got a red candle, then a green candle, then you got another red candle. That's not really what I like. If I was going to go with the direction, I'd go with the direction of the second candle. Here you also got it. You got green candle, red candle. Okay, go in the direction of the red candle. This first one failed, it just sold off, stopped you out. The second one also failed. That's why I prefer two of the same candles, both red candles or both green candles. Here you got two red candles. Then you see right as the market starts selling off. Here again you got the red and the green. When you're dealing with a minute-based chart, all right, the problem is it's time dependent, right? When you're looking at a range-based chart, you're watching how price moves from one level to another level. And oftentimes when you're dealing with a 1 minute chart, you get markets that are just dead, going sideways. And you often have point of controls sort of lining up around the same level. And it's just a sideways market. You're trying to trade breakout, but it's not really going anywhere. But when I start seeing point of controls bars pushing lower, point of controls at the same level, I'm more inclined to take those trades rather than down candle and green candle, even though point of controls are at the same level. Here's a this is also a 1 minute chart. Coming up off your low, point of controls, pair them up right here. Next bar opens up, just continues on higher. I like that pair up, right, of the same colors. Right over here, you got your pair up. You got pair up here. Right, next bar traded lower, came back up, still going sideways. Another pair up here. Now you're trading much lower, and the market sells off. So again, you can see how it works on a 5 minute chart. Over here you've got the pair up, but it's the opposite colors. Now, if I was going to use opposite colors, I'd be more inclined to use them on range-based charts than minute-based charts, because in minute-based charts you see markets consolidating more than you do on range-based charts, because range-based charts are based on making it new price ranges, right? So it's more important to me that we opened up, closed higher, point of control up near the top, next bar traded higher, came back down to the area, point of control put in some value there, and then continued back up higher. That's going to be more important to me than the clock just ticking, as you're going through, the trading day. That's why you often see on minute-based charts point of controls right around the same level. What's easier to trade, minute-based charts or range-based charts? Well, it really depends on your trading style. If minute-based charts, that at a certain time you're going to form a new bar. Range-based charts, in fast-moving markets, you're going to get a lot of bars really quick. So again, it comes down to your trading style. So that's the first setup. Second setup is extreme point of control. And extreme point of control, I talked about this earlier with stopping volume, occurs when the point of control appears at the very extreme of the bar. In an up bar, point of control is at the very bottom. In a down bar, point of control appears at the very top of the bar. It's the extreme of the bar, and it's indicative of stopping volume. I showed you this chart earlier. There's your stopping volume right there. Here's your stopping volume right here. You can see it. It's plain as day. This is why I love order flow. It's because it shows you this stuff very clearly. I mean, it doesn't get any more obvious than point of control at the bottom. Now this red bar here with point of control at the bottom is not stopping volume. If it appeared at the top of the bar, that would be stopping volume. If it appears on the bottom of a red bar, no, it has to be at the top of a red bar. It should be at the bottom of a green bar or green candles, because what's happened is the market sold off. It's a reversal setup. So you need a move to reverse, basically. And you're looking for volume to come in as support or resistance. Okay, so here's the market just sort of grinding its way up. This is a 1 minute chart, right? This is euro currency, and that's what you get with minute-based charts. Sometimes you get 2 price levels, sometimes you get 8 price levels. Then you get it here, right? Market so just going sideways. Bars trading here, can't push lower. The volume, all the volume came right at the bottom. Now I just said, think of it as a reversal, but at the same time you can look for stopping volume in directional trades. Market that's moving up, and you see this, you're thinking, oh, I don't think we're going lower, because we've got this point of control. It's coming in just above the previous point of control. So there's sort of an area in there, and the market's not pushing through it. You can see it went offered there, 25 lots offered at this level, and it just got scooped up, and the market rallied and traded higher. Up here you got stopping volume after this move up. It's just stopping right there. This is where all the volume is appearing. Again, the move down, here's your low, stopping volume, boom, it rallies up. This is a 1 minute chart. In the euro currency, There's another euro currency. This is a 5-minute chart. Stopping volume at the top of this move. You know, it doesn't get any clearer than that. Where's the market rally back up to? It rallies back up within a tick of that stopping volume before it sells off from the 114.26 area down into the 114.08 area down in here. Okay, now this is E-mini S&P is a 5-minute chart. Okay, you see it here. This is the night session, stopping volume right here. You still got the volume there. Second time you touch it, third time you touch it, less volume, and the market made it squirted higher. I mean, look at that. This is 1 in the morning, and whether it's 1 in the morning, whether it's 1 in the afternoon, the same concepts apply. So basically, what you're looking for is you're looking for the green candles, the up candles with point of control at the bottom, the red candles with point of control at the top. Now, if you're using the Order Flows Trader software, you can set it so that it will highlight it to you. So it's just obvious. It's just more cleaner to see. But again, you got 2 eyes. You should be able to see that quite clearly. So setup number 3, point of control in the wick. This is actually one of my favorites. And if you're familiar with candlestick charting, you should know what a morning star pattern is and a hammer pattern is. Forex traders refer to them as pin bars. These great Forex traders, guys that just got new to trading, think they discovered the holy grail with pin bars. And when they work pretty good. But when they don't work, you don't hear anything from them. And what I've found is, I've always liked them even before I got into order flows. I was always looking for those patterns actually. But what I found with order flows, when you mix it with order flow, it actually becomes more effective. And what you're looking for is point of control in the wick, okay, in the wick of the candlestick pattern. And it's a reversal pattern. It's a reversal pattern, but by itself, it's not always accurate. Maybe it's got 56. It actually seems a bit higher. It seems like in the 60% accuracy just by itself. But again, when people talk about accuracy of a candlestick pattern, it could sell off 2 ticks, or it could sell off 20 ticks, and they'll say, well, the 2 ticks, see, it sold off. Yeah, but you didn't hit your profit target. What you want is, something going to be more effective. Even though it sells off, you want to be able to make money on it. You don't want to just have the moral victory. Well, yeah, it sold off by 2 ticks, but you didn't take any profits, right? You want something that's going to give you better profits. So what do we got? Here, this is a pin bar. Well, this is candle in the wick, okay, or sorry, the point of control in the wick. People say, well, that's not a pin bar, because it's not in the top 30%. Okay, fine, fair enough. Really what I'm looking for is a small body, a long wick, and point of control in it. This one, yeah, technically it meets the criteria, but it doesn't have the short body. This one, again, is borderline. I really wouldn't consider this a shooting star. This one is borderline hammer. This would be a better shooting star up here at the top, and it would be beautiful if the point of control was up there. But for the point of this slide is this one right here. This one not really qualified, even though it's in the wick, and this one's in the wick. If this was shaved here by 1 price level, I would consider it. But it's over half the price level is the body. I like it to be less than half. Again, I'm not a stickler that it has to be certain amount, 30% or 38% or anything like that. I think that's all nonsense. Over here you got a pair up as well in the point of control as well. So you're starting to see these patterns. So as you start going through these setups, you should be able to see them developing right here. This one, not so much. I mean, even though it's in the wick, I just like it a little bit higher. I say in the wick, but I prefer it lower. But in the wick, in the wick, in the wick. That's what I'm looking for. So that was also there's a range-based chart. Now to the minute-based chart, right up here. To me, this is more indicative of a star. This one, not so much. I'd like a little smaller body, but okay, you can only take what the market's going to give you. You can't trade what the market is not giving you. Sometimes it just doesn't give you the exact pattern. That's why I crack up at these people. I'm a candlestick trader. I'm looking for this pattern, and it's got to be exact. It's got to be perfect. Markets don't trade in perfect. Markets are the most imperfect thing. Well, they're perfect for trading, but what I'm saying is, patterns are never exactly alike. That's why everyone talks about fractals. But the patterns, no two patterns are going to be exactly alike. But this is what I would consider it. This one, optically, it's there. So it's very similar to this one. You got 1, 2, 3. It's in the 4th price level. This is in the 5th price level, but the bar is just a little bit too long. I mean, for some people, they say, yeah, that can qualify. But this one, I think, just stands out much cleaner. Down here, I consider this one right here. This one, even though it's in the wick, again, the body is quite big. I like a smaller body, and the wick, in the point of control, a little bit lower down, rather than being so close to the middle. At least this one is, in the bottom third. This one I like. It's right up here, 3rd level from the high. Body, it's kind of big. It's less than half, which is good. This one I prefer my hammers to be green, not red, even though it did go up. But like I prefer this one here, not really a hammer because it's not this low. This one here, right here at 340, this low is not lower than this. So to be a hammer, it would have to be pointing down through this low. It's not. This one, not a hammer, and it's not even in the wick. But the one is this cell up here, from imagine getting short here at 27.29 all the way down to 27, at least here 27.24, or it just sort of goes sideways 24.25. This would be optimistic down here at 20. This one right up here, this is a beautiful one. You got the very small body, point of control right up near the top. I think it's in the 5th level of a bar that's got about 20 price levels. That's what you like to see. And look how beautiful this one is. 27.40 down to 27. Almost, it comes down here down to 27.30 before it makes that final run all the way down here to 27.10. This is a 5-minute chart, so you see it on 5 minute, you see that on 5 minute, you see it on 1 minute, you see it in euro currency, you see it in E-minis 8 range chart. So the same patterns appear time and time again, and as you start looking at them more and more, once you know what to look for in the order flow, I think it really becomes very easy for you to understand what to look for in point of controls. So setup number 4 is the slingshot point of control, and this is one that I haven't shared with. I've only shared with one other person actually, but it's something that I've been using for close to 2 years. And it occurs over 2 consecutive bars that are both moving in the same direction, i.e. 2 up bars or 2 down bars. And in the case of 2 consecutive up bars, 2 green candles, the point of control in the second bar is lower than the point of control in the first bar. So think about that. Okay, so you got 2 bars going up, 2 green candles. Point of control in the second bar is below the point of control of the first bar. Now, I just went through a lot of lessons where I say, on a market moving up, point of control should be higher. Now I'm telling you, well, there's a setup here where it's actually lower, but the bar closes higher. So it's going to be important. I'll show you in a second. And in the case of 2 consecutive down bars, 2 consecutive red candles, the point of control in the second bar is going to be higher than the point of control in the first bar. Go in the direction of price. Think of how you use a slingshot. Right? If you know what familiar with a slingshot is, right? You hold the slingshot in one hand, and then you pull the elastic rubber part back with your little rock inside, and then you let go and it goes forward. It's sort of the same thing. In this case, the point of control is pulling back before launching price forward. So do you see it? Okay, maybe not, but let me just make it easier for you. Right here, got an uptrend going on here. Boom, boom, boom. Point of control in this bar, even though it's a green candle, is lower. This bar was starting out, it was a red candle. It looked like market was probably going to start to sell off, and it was putting in some volume down here, churning back and forth, before eventually started squirting higher. But it left that point of control trail down here. And see how this market made this nice, beautiful move, as Donald Trump would say, this beautiful move up. So that's the slingshot. It's being pulled back Imagine, you got your slingshot, you pull it back, then you let it go and it shoots up like that. Goes up, up, up. See if you can see it here. It's right here. Whoops, doesn't help. Cut that one out. Sorry about that. But it's right here. Okay. So what do you got? Market's moving down, starts moving back up, puts in that higher point of control, slingshot, engaged, and then it sells off quite nicely there. This was one that I know works. I like to use it also in when I'm looking at 4x pairs. Works nicely there. Okay, so what do you got here? Right here, a small one. It wasn't the greatest trade here, but it's still what I'm looking for. Started to go back up. At that time, this was your low of the day. Got a slingshot. Yeah, it moved up before it failed. I had a lot of bullish things going for it here. You got prominent point of control. You got a stacked imbalance at the top. You got a divergence. You don't have a ratio, but it's it's close. Next bar is trading higher. So it's like you're thinking, hey, we're off to the races, and unfortunately, as luck would have it, this aggressive selling comes in, and you test that low and just blow right through it and go on down. Stuff happens. That's life. But I want you to see how it looks in that case. Okay, you should be starting to be able to see these things by now. And right up here at this high area here, you should see it clear as mud, clear as day rather. Right up here, slingshot engaged, pulled back, boom. I prefer it when the low, like if it's a sell, I prefer if the low takes out the previous low, or if it was a high, the bar of the second bar takes out the high of the first bar. That's just a personal preference. 5-minute chart. See it? Yeah, sometimes you sort of got to go through one by one, but there's a couple here actually. Get this one here. Whoops. That's not nice. There's one right here. There's another one right here. Again, why would I take this? I would only take the second trade if I was out of the first one. If I'm still in it, I'd probably just keep the position on. But look at that. I mean, these are those bars, right? Imagine the next bar is the big down bar. You wait 2 more bars, and you get the big down bar. Here you got, this candle sort of did nothing, went up a little bit, but then boom, sells off quite nicely here over the next couple of bars. Now, if you see it here, once you know what to look for, honestly, you start seeing these things. It's right over here. Pull back up into the stacked imbalance area, puts in some value there. Imagine that, and then boom, sells off. And again, you got a pair up here. You got opposite pair up here. I prefer this one. You got a little bit of a sell off, and then look at this. You got a hammer with point of control in the wick, and it makes a move up. All right, so setup number 5 is point of control wave. It's a 3-bar setup and occurs for a buy when there's a down bar, bar 1, followed by an up bar, bar 2, and another up bar. The point of control for bar 2 is going to be below the point of control in bar 1, and the point of control of bar 3 is above the point of control in bar 1. So you have a point of control in the first bar. Second bar, point of control is below the point of control of the first bar. Second bar, point of control is above the point of control of the first bar. That's for a buy. For a sell, it's the opposite. You have a green candle, green bar, an up bar. It's got a point of control. Then the next bar is a down bar, red candle. and another down bar. The point of control in bar 2 is going to be above the point of control of bar 1. And the point of control of bar 3 is going to be below the point of control of bar 1. It's a reversal pattern, and it's going to be most effective around swing high, swing lows. That's where you should key in on it in the market. And where do you see it? See it right here? Hopefully you can see that. Again, since it's swing high, swing lows, point of control, this is your red bar, green, point of control lower, point of control higher. Notice right there. You have another one happening right here, point of control, here, here, continues up. This point of control is the same level. Then you got point of control here and here, right? This is off your high. Look at that, right there. This one, point of controls are sort of bunched together, but it's point of control, one tick higher, one tick lower, and it sells off. Here, again, point of control, below, above, goes higher. Boom, boom. This one is one that I like a lot as well. And you see it a lot, but I think for me it's a reversal pattern, so you should be looking at it around reverses. So you have it here. You know, you got the red candle, then green, and then green. Point of control higher, point of control lower. This one, no, because you got green candle, point of control higher, point of control at the same level. This one, no, point of control is green, but then point of control is there. Point of control is still above this point of control, just as this one. Even though the point of control here is higher, point of control of this bar is still above there. Here's a buy. You got swing low in this bar. Point of control in the red candle. Point of control is below, then above. Goes higher. This point of control is the same level as this one, so it's not lower. Right? You would, for a sell, you would want point of control being below this point of control in this bar. Okay, right here's the most obvious one. Point of control, swing low, lower point of control, start moving away from that low, point of control higher. And then boom, the next bar is the big up bar. This is not it, even though it's a green candle. Then you got red, but this is, even though point of control is lower, this is a green candle. If this was a red candle, that would be a sell to me, not the green candle. Then you got a bunch of sideways activity right here. Again, by how do you know? Well, point of controls are sort of lined up in this area. They're not going anywhere. You know, we're sort of putting in a value area around here at 26.95 3/4. Okay, what do you got? By now you should be able to start to see these, that it really becomes clear right up here, right at the top. It's a bit wide, you know, point of control higher, point of control lower, and you just continue in that direction. Five-minute chart. What do you got? Take a look right here. It's showing up right here. Point of control, lower, higher. Add the fact that this is a this is your hammer with point of control in the wick as well. So you got a couple patterns going in that same pattern. Does it make it more powerful? Well, no. It should be powerful by itself. You should already be looking for that trade. But when you see a couple of things, I'm not someone that says, well, you got confluence. You know, you got 8 different patterns appearing at the same time. Does it make it any stronger? Not necessarily. Okay, it's a 5-minute chart here. S&Ps. Right up here, right off this, right at the high of the day. Point of control higher in the red bar, point of control lower in the second red bar. You start selling off. Over the next bar, just straight down, you know, that's a quick 4 points. 5-minute chart, it rallies back up here before selling off some more, but really the trade is this next bar right there. You know, the longer you stay in the market, the more at risk you are. So, you know, if the market goes in your favor quickly, take your profit. You don't need to sit around trying to squeeze every last ounce out of it. You know, if you got a trade a 5-minute chart and you get 4 points, 5 points out of it, that's already very good. So this is a 4-range chart now, right? I was showing you 8 range. I showed you minute-based chart. I showed you 5-minute chart. So this is one that also can work on lower time frames in the sense of, you know, 4-range charts. And you can see them right here appearing quite often on 4-range charts, actually. Yeah, you got one here. Another one here. And here actually too. You know, this was a buy, and then you turned around with a sell, turned on you, and then another buy right here. So right there. So you can see on 4-range chart as well. You know, so maybe you got 3 winners out of 4 trades. Also a 4-range chart. This is wheat, right? I've been sticking mostly to E-mini S&Ps. You know, I threw in some euro currencies, but you know, I want you to see how this works on other contracts. So, well, I don't trade wheat. Well, maybe you don't, but somebody else does, and we're going to find this. Yeah, I could use that in my market. So apply it to, you know, the markets that you trade, and you know, look for these patterns right there. So, you know, there's no excuse for not being able to find a pattern. That's 5 setups I just went through. And, you know, hopefully you can find 1 or 2 of those that you say, you know what, that makes perfect sense to me. I'm going to use that in my trading. That's the whole point, right? Take what resonates with you, things that you can work on and develop and apply it to your trading. So that concludes lesson number 6. Thanks, everyone. And I'll see you on the next lesson. The next lesson is part 2 of the setups, which is another 5 different setups I'm going to talk about. And again, it's not about getting you to trade with every single setup. No, it's about getting you comfortable with point of control that you can take 1 or 2 of these setups and apply them to your own trading. So thanks, and I'll see you on the next lesson.